Welcome to a Market Matters update. Sean, this market started to correct the last few days. The index was off today, index was off yesterday. We had a nice 70 point down day last week. In the last week you have purchased some CBA, close to all-time highs. Just wanted to get your read on the reason for the trade and what you're seeing with this market, given we've had a few questions from subscribers moving forward.
Well, it's become finally this market's become really interesting. We broke out to a 6-year high last week. The US market made all-time highs again in the last couple of weeks. That historically and mathematically is a huge buy signal. If you'd bought the S&P when it first made an all-time high, which was breaking the pre-GFC high, it's gone up 23% since it made that all-time high, and it only pulled back 1%. So you'd made 23%, the most you ever would have been behind would have been 1%. I call that good risk reward. CBA made an all-time high recently. I bought some, okay? I like CBA. Bigger picture, I've said on the reports for quite a while now. CBA, I believe, over the next 5 to 10 years goes a lot higher. I was very underweight the market. We had a breakout to 6-year highs. I've purchased some CBA. What a bad time. Ideally, I would have done it the day afterwards. CBA has now dropped down about 1.5% from where I got it. I bought it around 83.50. That doesn't really bother me. It's only down 1.5%. It's not a really big deal. We look at our overall other holdings. MTU was up very strongly today, over 3% at one stage. Came back a bit. The portfolio we're holding with CBA in it is a pretty low beta for portfolio. In other words, it doesn't follow the market that closely. So I bought CBA making an all-time high. I wish I bought it the next day. If it comes back another couple of dollars, I'll buy some more. So what are we looking at now? Where do I see the market? People are saying, well, Sean, you've been short the banks, negative the banks for a long time, which I have. Not so much negative the banks as negative the whole yield play. I think there's a bit of an unravelling that's going to happen there, and we may come back a bit further, which I know contradicts with the CBA play, but I think CBA will significantly outperform the other banks, especially Westpac. Now, I've got a short position on in Westpac. I'm positioned for Westpac to go down via options. That, unfortunately, is more sophisticated than the average person that is listening to this video. But if you look at my positions, it shows a short Westpac position. The bank's dropped 5%. I actually make money. One thing we offer at Market Matters is two things. Well, I should say not just one thing. We're very transparent. I'm not going to hide trades from you. I bought CBA, not at the best possible price. I could have bought it today cheaper. But the Westpac short position is making more than enough money to cover it. Any questions around that, drop us an email. I'll either call you or send you an email and explain it to you. But it is a sophisticated play, but it's what I've done. So sometimes things aren't straightforward. We have to tell you what we're doing, and that's the position on. I think CBA will outperform Westpac. The other banks, I still think, will come lower. My favourite one by far is Bank of Queensland. I think Bank of Queensland, we're going to buy that under $11.50. I think today it closed near $12.20. It's the fastest growing bank in Australia on the lowest PE ratio. When we see the CBA pay its dividend in August, I believe Bank of Queensland will come back into favour. Hopefully it's down to $11.50, and I'll be an aggressive buyer of that. So it's one thing to say, you know, a bank's a good company. Another thing is a good level to buy it. So that's my overall view around the banks. I think I'll get most of them cheaper. I think CBA will outperform Westpac. So overall, I quite like what we're doing. The 1.5% I'm behind on the CBA. I wish it wasn't the case, but we can't be perfect all the time.
Awesome. Thanks a lot for that update.